Hello everyone. Welcome to another video from Rashi Alpha. In our last video, we discussed about investing strategy, starting from insider buying to studying a particular company fundamentally. This time, we are going to study and understand why every insider buying is not a blind bet and why we need to do due diligence before making any rational decision. So let's get started. So, following the same approach as we did last time, uh, I found that there has been some recent buying in a diagnostic company called Suraksha Diagnostic. So, I go to screener now and look at the promoter buying. Uh, the recent trades which I see is that there have been a couple of insider trades here by the promoters in September, August, June, amounting to almost 2.8 CR. This is good amount compared to company's market cap of 1500 CR. So I just wanted to study more as to what is causing the promoters or compelling them to buy this company. So let's look at the key points and what Suraksha Diagnostic does. As we all can see, it's a diagnostic company. So mostly it does some pathological and radiology tests, I guess. So it works mostly on hub and spoke model. So it's a model where there is a central lab and there are various collection centers, and these collection centers collect samples and uh, deposit their sample to a particular central lab and basically get the test done there. This company mostly works on a B2C model and some revenue from B2B model. It's mostly concentrated in West Bengal, contributing to 100% of revenue. So it's a local player from West Bengal itself. It's not spread nationwide. And its revenue bifurcation is like radiology is 45% and pathology is 50% around 50%. So pathology is basically the test done for pathogens in your body which may be causing sickness, and radiology is mostly for the tests like the MRI tests, and those tests are basically part of radiology. So B2C is this around 94% concentrated. It has basically recently acquired a company called Fetomat to inorganically. So it's planning to grow in the prenatal and fetal medicine clinic sector. Let's see why it did and what how much revenue it plans to get from this acquisition. So it has some B2B tie-ups as well. IPO details: it raised 846 CR through the IPO and were listed recently in December 2024. But this thing is pretty much interesting. The entire issue was an offer for sale. So it looks like the promoters sold their stake during the IPO and then they're like looking to buy back now because the stock price has fallen from the listing day of 410 to around the lows of 296 as we are speaking. It looks like mostly the promoters are trying to uh, buy back the company at lower levels by some amount because they have already gained a good amount of money by selling their stake during the IPO. Let's look at the company's performance and see. So before going there, I can see that there are a lot of peer companies like Dr. Lal Pathlayas, Metropolis, Vijaya, Thyrocare, Krishna. We are going to have a look and compare a bit as to how these companies are faring. Going to the profit and loss statement, sales are pretty much growing at the tune of 15% year on year. The operating profit margin is also around 33 to yeah, it's around 30 to 33% for the past 2 to 3 years. Uh, the interest coverage ratio is also healthy, and the PAT is also going at us almost the same constant rate. Um, Looking at the balance sheet, there are hardly any long-term borrowings, so it's good. It's not very much debt-ridden. There are some lease liabilities. It may have because maybe it may be working on some. Uh, it may be working on some lease protocols, basically for opening any center or not. But that's very less. The fixed assets are mostly on equipments and buildings, and the capital work in progress is around 11 CR. So maybe they are using this capital to maybe do some kind of a capex by buying some more plants, opening a new center, or maybe acquisition as well. Okay, let's look at the cash flows. Cash flow is 63 cr out of 84 cr, so a very healthy cash flow basically. Um Around 80% is coming back from their profits. The working capital cycle is quite healthy as well. 7 and 1, so it's almost good. Um, there is hardly any interest needed to be paid. Cash from investing activity, let's see, mostly they are doing some acquisition of buying some assets, which is to a tune of 42 cr. And there is some financial liabilities here. Maybe they have are working on a lease model, and that's why they have added it in the financial activity. So overall, cash flows are pretty good from operatings. Looking at the cash conversion cycle, it's okay. So this is also very good. Mostly it looks like they are mostly paying their suppliers after a long time. Mostly they are using that cash to basically pay off the receivables, and I mean to get their receivables and store it in the inventory as well. So I think a good cash conversion cycle. The ROC is also mid-teens. Okay, let's look at what the company is saying about its performance. Before that, let me just have a look if there is not anything on plus side. Nothing. EBITDA is also good. Mostly, I would like to compare it on the PE side because most of the stocks of this sector have less debt and are not very asset heavy. So I would like to compare it on the PE side. So this is the trailing 12-month price to earnings. Let's see how much growth they are having and what's the management saying. I just have the notes. Go to the notes. I see that they are mentioning about the acquisition in this Q1 FY26 result, and what they're expecting the Cetomet is mostly in genomic medicine. Okay, for mostly in pregnancy care and women's ultrasound scanning. So they are trying to enter into this space. Okay. Uh, it's slowly going to be integrated from Q2 onwards. So Suraksha Genomics vertical, they are launching with this acquisition as well. They are invested 22 cr as capex, and 45 cr they are already going to add more. Uh, so they are expecting that it will drive the future growth for this company. But they are saying that it will be maybe a growth for the next decade as well, from because this is a new field exactly. Expansion wise, they have added new centers. This time they have closed three, maybe some hub management system, some hub based were closed, and one PPP, public private partnership, was also closed in Shillong. Uh, they are confident of delivering 15 to 8 gross centers additions in this fiscal year, aiming to reach 100 centers in 2 to 3 years. Currently, they have 58 centers, so they are planning to almost double it in the next 2 to 3 years. The operational and business models, yeah. So as we saw that they are mostly uh, planning on focusing on genomics, and they plan to be the leading testing lab for genomics in Eastern India. Okay, they mentioned that they are a regional play with high entry barriers due to trust and doctor relationship and local brand equity. So they want to work in that way itself. They want to be a trusted brand in a particular region because trust building takes time. So B2B, they are mostly B2C, but I think they mentioned somewhere that they want to shift to increase B2B as well. So B2B will add scale to their business as well. On the earnings side, yes, we saw that they have basically grown on the tune of almost 18 to 20% on the top line. EBITDA margin is around 33, 34%. PAT growth is also around 20% with margins of PAT being 12%. Volume growth is 26% YOY. Margins are mostly healthy for mature centers. For mid centers is 20%, but new ones are, some of them are loss making, but they want to convert them to profit making after some time. They definitely want to maintain a margin of around 35%, and they would want to maintain a growth guidance of 15% on the top line. Okay. I think on the industry, they said that Diagnostics are preferred because they have lesser cost over hospitals, and on the competitive, they feel that there is competition from national players like Dr. Lal and Metropolis, SRL, regional players as well, but they are downplaying any immediate threat. Okay. Genomics ramp up, they're saying that it will definitely be slow. So there's no inflection point with this acquisition. It looks like that. It will take some time. Key challenge is talent actually here. They believe that aggressive center additions will dilute margins. So that's why and they want to focus on the scaling network before margin optimization. Uh, we already saw that what they are planning to guide for this fiscal year. I think that's okay. That we can take with us. Now let's look at what other companies are doing. Just have a quick overview of how other companies are performing. So I basically use ChatGPT and just uh, did analysis of how these diagnostic companies fared in Q1 FY26. So Dr. Albert Labs has the highest market cap and found that it's having almost a revenue growth of 11%, EBITDA margin to 29%, and they're giving guidance of 11 to 12% with EBITDA margin being around same levels. They're emphasizing on volume growth and expansion in tier 3 and 4 cities. The sentiment of the commentary was positive. They believe strong performance with robust growth and strategic plan expansion plans is going to give them the further growth. Metropolis as well, I think, is having a good YOY revenue growth of 23%, and has a lower teen EBIT actually. But they're guiding organic revenue growth of 7 to 8%. They focus on organic growth and acquisitions. Nothing much to take on the sentiment side. They are positive as well. Vijaya, Thyrocare, okay. Um, so all of them are mostly having revenue growth north of Suraksha, looks like that. 23%. Thyrocare is having 23% and good EBITDA margin as well. So it has 30%. But it's expecting mid-teen revenue as well and volume growth for FY26 because they had a good FY25 base year as well. And they are also focusing on expanding the franchisee as well for Thyrocare. Krishna Diagnostics is mostly focused on PP model. So it has country's largest P2P network for diagnostics with the governments of different states. So it's also growing at 13% top line and has a EBITDA margin of 27%. And they believe expansion through PPP contracts, and they're also focusing on adding B2C model as well, trying to increase that to 8% in 2 to 3 years. That's what I read somewhere. So we already saw how Suraksha Diagnostics is faring. So they are also trying to maintain revenue around 15, mid-teen percent and EBITDA around 30 to 35%. So we saw how this sector is faring overall. So my thoughts would be that Suraksha is mostly guiding in tune of what the industry is guiding. Most of the companies are guiding mid-teens and around 30% EBITDA margins. And Suraksha being a smaller company, but it looks at the revenue and the market cap. I feel that there are other companies in this space, like even Thyrocare is having good revenue growth and guiding for 30% around EBITDA margins. And it also believes in achieving mid-teen revenue. So I feel that companies bigger than Suraksha are also able to guide the same amount of growth. So we need to understand why what are the compelling reasons why anyone would like to bet on Suraksha compared to other companies as well. I was not able to find any key pointers as to why Suraksha could be given a premium over other companies. Also, my final thoughts would be is to think why this entire diagnostic sector is currently at a good risk reward. Uh, why this entire diagnostic space is currently lucrative or not? Is this going to see some inflection or has already seen inflection? Is there any alpha left to be generated here? Because there are a lot of players, there is a lot of competition. And what is the risk reward ratio if anyone wants to invest in any of these companies? I found that most of them have a good, healthy balance sheet. Looking at the valuations, what I see, I think that the growth needs to catch up more because even for a FY26 PE of around 40ish, yeah, 40ish, considering 15% ProPat, I would think why I would pay 40 PE to companies growing at 15 to 20%. So that is something which we need to understand. Unless I find anywhere they're having some inflection or any moat anywhere. Um, Let me know if you want to learn how to analyze diagnostic stocks or this sector or any company specific deep dive. If you like my content, please like, comment, and subscribe to my channel for more videos. Thank you.